On the program, since this is our last program of the year 2024, it's kind of a weird week, right? You got the 2 trading days on Monday and Tuesday, then Wednesday is the January 1 holiday, so the markets are closed that day. Then the markets reopen in the year 2025 for the Thursday and the Friday. So, as is always the case, we always like to give a clean, fearless forecast for the year 25 without knowing what has gone on in the markets for any amount of time. So that's why we do the fearless forecast on this program. And then the next program, which will be our first program of the year 2025, we're going to talk about some of the investment themes to be aware of for the year 2025. So as we get down to making our fearless forecast for the year 2025, I always like to kind of think through some of the things that sort of catch our attention. And as we were saying before the break, the number of global hotspots seems like there's a number of them, that if any of those gets hotter, then obviously that's going to have a dramatic impact on the economy, the markets, your finances, all of those kinds of things. At the same point in time, we also like to kind of think about the broader picture as we look ahead to 2025. And one of the things that concerns us as we close out the year 2024 is sort of the amount of, and I guess I'll call it financial silliness, that we see today. Another way to think of it is sort of a loss of perspective about what risk is, and our concern of when we see that there's always then a sort of a return to reason that kind of typically happens, that then involves the value of those things that have really kind of gone up for no real explanation, rapidly declining. And if there is a spillover effect, and sometimes there is, then that's going to have a broader economic impact. The classic example is what we saw in the year 1999, in preparation for Y2K. If you had .com in your business name, many companies did and didn't really have a business plan, let alone revenues or, heaven forbid, profit, then as long as you had the .com in your name, people thought your company was going to be incredibly valuable. So prices for those types of companies were bid up pretty dramatically. I remember going to the old Citrus Bowl, and now it's called whatever it is these days, Camping World Stadium, I guess. But going to the old Citrus Bowl, it is January 1 of the year 2000, so we've managed to survive Y2K. The planes didn't fall out of the sky and all that stuff. And so you go to the game, and you got a hat. They were giving the hat as the free item, and I actually held on to that hat because the Florida Gators were playing in that game, and my wife had gone to the University of Florida, so that by marriage made me a Florida Gator fan. And so I said, I have a Gator hat. On the side of the Gator hat was the emblem for that particular bowl game. And so in that year, it was branded the Outdoor.com Bowl. You ever heard of Outdoor.com? Yeah, I didn't think so. Didn't exactly last. Those are the kinds of things that catch our attention. When prices run up as money chases the allure of a promise that winds up being clearly illusory. And I'm seeing that same type of ignoring the risk of what it means to invest in certain pockets of investments. And I'm not kind of talking about the large cap growth of the FANGs or any of those. Those have been dominating the markets. The reality is that while those companies their price may be much higher than you would expect, they actually do make a product and provide a service and actually have revenues and profits and things like that. But I'm talking about those types of assets where they don't have that, much like the .com era of 1999. And if you lose perspective on that, or if you see larger and larger parts of society sort of losing perspective, the reality is you're going to do so at your peril. And more specifically, let me give you kind of three different examples of things that we've seen over the past probably several months that really kind of caught our attention and made us think about this. I don't know if you saw any of these stories or not, but the first one has to do with that piece of art, right? That was like a banana that was duct taped to like a bulletin board, okay, or whiteboard kind of thing. That piece of art, quote unquote, sold for $6.2 million, and the purchaser of that piece of art promptly took the banana and ate the banana. Paid $6.2 million for it. You see, you hear stuff like that, and you kind of say, that's kind of weird. And then the story continues. $9.3 billion. We mentioned Bitcoin ETFs earlier in the program. The SEC approved those back in February. $9.3 billion has flowed into Bitcoin ETFs in the past 45 days. Guys, I'm still in the camp of the emperor has no clothes on that one. If you don't know what the emperor has no clothes is, it's a kid's book. Read it. It's got universal application. The most troubling one out of all three of these sort of things that have floated across my desk is, and I kid you not, we're doing this with a straight face, there is a crypto-based coin called Fart Coin. Yes, you heard me. The total market value of Fart Coin is $565 million. To put that number in perspective, okay, that valuation of something that clearly doesn't have any value at all, that is a greater valuation on Fart Coin than 38% of the publicly traded companies in America today. That are actually, those companies are actually, delivering some form of good or product or service that people are using. All of these things, folks, concern me in that we've seen it a lot over the 25 years we've been doing this. And whenever risk starts to be ignored, and it starts in little pockets, kind of like this, the art world, or some ridiculous crypto coin called Fart Coin or whatever. People start believing that things with no actual value start to have fantastical values, then at some point the music is going to stop pretty quickly, and potentially that spreads, a la the .com era of the late 90s, and potentially that spreads to impact broader parts of the economy and the markets. So that's number one. Number two is I also worry about a return of inflation. I don't think inflation has necessarily been fully vanquished by any stretch of the imagination, particularly if we have a higher level of deficit spending by the federal government. Then you could wind up having a return to inflation. So those are kind of the things that weigh on me, that concern me as I think about what the next year, 2025, will be. But there's also some stuff on the flip side that leaves me optimistic, or I guess cautiously optimistic, for what the year 2025 will hold for us as investors. So here in the last segment coming up, we're going to end with those positive things that ultimately help to provide the basis for our fearless forecast for the year 2025. Coming up next year on Dollars and Cents with Joel Garris of Nelson Financial Planning.